Hello and welcome. Yesterday, the European currency extended gains. In the first half of the day, it was difficult to the euro-dollar pair to break above local highs. However, during the US session, bulls managed to push the price further up. As for the British pound, the focus of market participants was on the Bank of England's decision on interest rates. Although the regulator raised rates by 0.25 percentage points to 0.75% as expected, this measure is unlikely to improve the situation. The British economy is obviously shrinking. The central bank raised concerns over soaring inflation. The inflation rate is projected to rise about 8% by the end of the year. An overheated labor market continues to push consumer prices up. Besides, geopolitical tensions and higher energy prices contribute to a worsening of the situation with inflationary pressures. The Bank of England said that it would take more aggressive steps if necessary. Against this background, the pound sterling collapsed but then recouped most of early losses. As a result, the currency closed in the area it kicked off the trading day. Today's macroeconomic calendar is bereft of any important releases. Of course, traders may take notice of US exciting home sales and the index of leading economic indicators, but these reports will hardly have a severe impact on market sentiment. Thus, investors will most likely lock in profits and bulls will try to maintain the uptrend. However, the euro-dollar pair is unlikely to hit a new high. Therefore, market players are recommended to focus on the level of 1.1101. A false breakout at this mark will create a sell signal and the price will slide to 1.1045. At this level, bulls are expected to try to form the lower boundary of the ascending channel. A false breakout at 1.1015 will lead to an increase in long positions. In the pair will probably return to 1.1101. If trading activity is subdued and the price tests this mark and then rebounds by 10-15 pips, I recommended then you open short positions. In this case, a retest of 1.1045 will result in a breakout and a steeper decline in the euro to 1.0996. At this level, it will be possible to go long on the rebound if the price consolidates about 1.1101 and tests it from the top down. A buy signal will be created. In this situation, the pair will have a chance of hitting a new high, rising to the level of 1.1165. At this mark, traders will be able to go short amid a false breakout, counting on an intraday correction of 25-30 pips. Short positions on the rebound can be considered only at the level of 1.1227. Speaking of the British pound, it's worth focusing on the level of 1.3144, which acts as support. If the price breaks through this and fixes below it, the volume of short positions will be increased and the pound-dollar pair will return to 1.3094. In this area, it will be a wise decision to go long amid a false breakout. Long position on a rebound can be considered only at the level of 1.3046. If bulls are able to take control of the 1.3144 mark, a bull signal will appear. In this case, the quotes will most likely head for 1.3198, the upper boundary of the sideways channel. In the event of a false breakout at this level, it will be possible to sell the pair with a view to catching an intraday correction of 35-40 pips. Short positions on the rebound can be considered only at 1.3244. Good luck and have a nice weekend.